Stacking up today, Russell Rhodes of the Chicago Board Options Exchange joins me now to take a look at some trades that might be forming out there. Thanks for coming on the show.
I'm always happy to be here.
You're paying close attention to the NASDAQ and the Russell. Let's start with the NASDAQ.
Sure. The NASDAQ it's heavily weighted in what we often refer to as FANG stocks, and everybody knows that those stocks have been extra volatile as late. Well, what's happening now is this is working its way into the NASDAQ option market, and specifically the NASDAQ Volatility Index, which is at about 3 times its normal average premium relative to VIX, which in layman's terms means there's a lot more risk being priced into the technology sector right now than we've seen over the past few years.
And traders are buying protection, so they're
Exactly.
buying more puts perhaps.
They're buying more puts, and they're specifically buying more puts on an index that is very heavily weighted in the technology sector.
Interesting. Well, what about the Russell, the small caps?
Well, the small caps have been really interesting, and we can go back to late 2016 with a huge outperformance of the Russell 2000 relative to the S&P 500. That reversed itself for the first half of 2017 with the Russell 2000 underperforming by about 5%. And what coincided with that, going back to volatility, is the Russell 2000 Volatility Index at a significant premium relative to VIX. Well, the last couple of weeks we've actually seen that premium shrinking, which could be an indication that it's time for small caps to play a little bit of catch up with large caps.
We will see. Thanks for coming on the show, Russell.
You bet.